All right, so does everybody see the screen?
Yes.
All right, so I'm Ron Yarbrough. I'm chairman of the Affiliate Involvement Committee for the Lake Ozark Board of Realtors. We are having our first ever Zoom Feed Your Brain series today, and I think there's going to be a lot of great information. So I'm going to lay out a few rules. Beth Riggins is president of the Lake Ozark Board of Realtors. She's going to be monitoring the chat for any questions and stuff we may have that pop up. For the most part, we'll try to get most of those questions answered maybe after each section or at the end of the presentation. But the reason we started this Feed Your Brain series and the Affiliate Involvement Committee was basically to provide a better quality of information to the real estate community and to add more value for the affiliates and hopefully help realtors have a better resource of people to use for services such as inspections, insurance, title services, all those things. The people who are really involved in the affiliate committee or the affiliate program with Lake Ozark Board of Realtors need to be our go-to people. So I put on my screen right here a direct link to the roster of affiliates. You know, feel free to make note of that or go to LOBR.net and click on that if you're ever looking for engineers, inspectors, insurance companies, title companies, people who are in the area that service this area. So I wanted to get that first because we all work together, and the lake is a very unique place. So it's nice to work with people that are experienced at the lake. So today's agenda is first, you know, we're going to share some current market data on land, houses, availability or lack thereof on the housing market. Cricket Staggs will be presenting during that time. Second, we're going to have John Seaton and Tim, who I forgot to add your name in on this bullet point. They're going to be going over information on the difference between modular and manufactured home construction. They're actually with a company that builds these, delivers these homes to the area, so that we're going to get firsthand knowledge. Hopefully they can share a little bit of information with us, maybe a video or something like that to show us you know, what their process is. But I think it's going to be some great information, and it's not from a sales standpoint. It's going to be great information. Third, I've got Scott Murphree-Roberts. He's with Hayman Engineering. He's actually officing down in Springfield, but we had a conversation yesterday. They have a lot of people in different areas throughout the Missouri and Lake area that can help expedite engineering reports and things like that for manufactured housing, for existing manufactured housing or new manufactured housing. And then fourth, we're going to kind of go into a little bit about how you can get a brand new home, increase housing stock at the Lake of the Ozarks with newer homes and priced at, you know, $100 a square foot finished or less, depending on what you're, you know, trying to do. So we'll go into that a little bit and then hopefully record this and share it with other people so we can get this knowledge out here. I've been in the mortgage business for 27 plus years, and manufactured housing is a very unique product from a risk standpoint. Therefore, it's very difficult to get resales done. There's a lot of work that needs to be done. All the lenders at the lake will loan money on manufactured housing, double wide, permanently affixed, which also I was going to mention Trish might have to log in or chime in on the affixation part. I didn't add her to the presentation, but it's a pretty unique property just because of the fact of the risk, the risk of foreclosure, the risk of loss. So it's a reason that we have a lot of those rules. So what is the current market and why? Hey, I've got that one slide in there. Cricket, you want to go ahead and take over for now?
Sure, yeah. I filled out just basically one slide because I'm not good at PowerPoint presentations. I'm just decent at presentations. So I'll fill out the slide here and tell you kind of what I explained in this slide, because this is kind of what I thought Ron was asking me to do. Basically, the first thing to point out is that every market, anytime, I guess, let me back up. My name is Cricket. Hi, guys. I'm a local realtor, work with the Lake Ozark Board of Realtors. I'm on the board and I'm a member of the MLS committee. Again, I'm one of 700 realtors in the Lake area, so reach out to any one of us. We should be able to provide you with information like these statistics. This is the type of stuff that you need to know in order to make an educated decision. So again, what I'll provide you with is things like what an absorption rate is, and I won't belabor the point, so I'm gonna make this short. So without further ado, again, if you would ask me right now, how's the market at the Lake of the Ozarks? Obviously, my answer would depend on a lot of what type of property are you asking about. We have properties that range from a few $1,000s for an inexpensive lot somewhere all the way up to millions of dollars, as you guys know. And of course, if you were to ask me how the market is, I might have to ask you, what market are you asking about? So if you were the majority of buyers right now in the market, you'd have to look at demographics to see what that is. And the demographics I can pull demographics for any zip code or any area, or plug in multiple zip codes. I used Camdenton as an example, and I use that because it's a good example of an area that's going to have homes that are similar to what we're talking about now, manufactured, modular, things like that, that aren't necessarily going to be all lakefront like some of those zip codes that we have out there. For example, if I pulled the Four Seasons or the Lake Ozark code, it would give us totally different statistics that wouldn't pertain as much to this conversation. So again, Camdenton statistics that I pulled, for example, population density is ridiculous. The state average is 68 people per mile. Camdenton has 121 people per mile. The demographics can be skewed a little bit because of the amount of people that are part-time residents, but remember, most of those aren't in the Census Bureau's information as a resident of Lake of the Ozarks or resident in Camdenton. So median income, $75,000 a year or less for 67% of the population of Camdenton. So that's a majority, a vast majority of the population of Camdenton, according to the Census Bureau. Household income is $75,000 a year or less. 91% of Camdenton's zip code residents are below $125,000 a year in household income. You consult with any one of the lenders and they will tell you what that affords you in home. And of course, if you're buying other things and you have children and you're working at a factory and she's working at a factory, you get, again, how much your income level is for purchasing a home. So education level, 50% of the residents are high school graduates or less. So again, that lends to the amount of job that they can find and work into without the higher education. And then job density, if you look at the job density numbers, 50% or over 50% of the job density is in basic accommodations like food and accommodations and retail and health and social work that doesn't necessarily require a degree. And then there are very few jobs that require that massive degree that are that higher income level. They're actual residents. So when we talk about the demographics of Camdenton in particular, and really the lake in general, and the actual residents, we don't have the income that you would think to be able to afford a whole lot. Again, we've kind of parsed that down to numbers, and that comes up to any given buyer is going to want somewhere in the range of a 3-bedroom, 2-bath home. They're going to want 1,000 square feet or more, and they're going to want to be able to fit, a few people in it. So those numbers make sense for the type of market that we're looking at. So if we were the regular 3-bedroom, 2-bath buyer that's looking at the market right now, you're going to have about $130,000 to spend. Kind of max is where the bank will tell you your budget is. And again, everybody's different with what they can afford, but those are the clients that I see, and every realtor on here is probably shaking their head saying, yeah, I got a line of those clients that are stacked up and they can afford a particular type of loan. So that lends to the type of market that's out there. And if you look at 130,000 and under 3-bedroom, 2-bath homes right now, lake-wide, we have 32 of those in the MLS that are active properties available for purchase. Some of them are stick-built homes, some of them are modular, some of them are manufactured. That adds up to, if you look at the numbers from last year, 210 properties were sold in the last 365 days. So that's an average of about 17 a month in this same bucket is what I call it. It's a price bucket. Again, it's the area that you're looking for in properties. So literally, if you're this buyer, right now you have 32 lake-wide to choose from. Probably a lot less if you've got a particular driving distance from work or something, because again, this is lake-wide. For Lake of the Ozarks, of course, it goes almost out to Warsaw. If you're logging in from the general public and you're not familiar, the MLS system that I'm operating in goes around the entire Lake of the Ozarks area into the Camdenton area, just about down to Lebanon, all the way around to up to Eldon, Stoutland area, and kind of encompasses that. It doesn't go out as far as Warsaw. It kind of does. Sheila, for example, is one of the agents that work both areas. So again, this is the market that I'm talking about here. So if you're looking in that market to buy a home, last year 210 of them sold. The year before that 204 of them sold. So it's an average of about 16 or 17 a month, pretty steady. There's 32 of them currently on the market. That means we've got a 1.8 month supply inventory. So what that means, that absorption rate stuff that's on the screen there, a 1.8 month supply of inventory is homes that will actually qualify for like a 3.5% down or a low down payment loan. If you're unfamiliar, and again, I'll let the lenders explain this, but you've got variable types of loans that you can take out when you buy a home, and the first one would be a conventional loan where you've got a large down payment or a decent down payment, and then the others that we talk about here are the low down payment loans where you can take someone who's renting and put them straight into a mortgage without a whole lot of money, if any, out of their pocket. So 3.5% down is an FHA loan, for example. There's about a 1.8 month supply of those homes. Zero down homes that are not manufactured, for example, that don't qualify for the USDA, the general USDA guaranteed loan. That's about a 1.2 month supply of inventory. And again, that's literally, if you go to look at those homes, there's 12 of them out there, lake-wide, to choose from. So go look at them all, pick one and buy it, because there's going to be less of them on the market next month. You can't find them. So that's absorption rate. That's how that works. And again, the reason I'm pointing that out is because this is the market that we're looking at, and how it plays into what we're doing here is if you look at the market in manufacturers and modulars, you see this cute little thing over my shoulder here. This is a manufactured home, but it's not. I'm trying to point at it somewhere over there. Yeah, it's a single wide manufactured home. And again, I don't want to give you the whole history of manufactured homes and how they work, but one important discussion here is that modular homes and manufactured homes are different things. So in sharing, I think I get the option to share my screen here. Let me share it. Oh,
I got to stop.
right on. We don't. All right.
Okay.
Well, here, I'll share my screen real quick because I just wanted to show you kind of what these things are. Thought I had it prepared here. All right. Here we go. Sorry, guys. Doing multiple things at once on this thing, apparently. Matrix page here. This handsome devil is a $300-some-thousand home that sold at the lake. And again, I just wanted to play that in the background because most people would tell you that that's a stick-built home, and it is. This is also a modular build home. So it's not a manufactured home as in a double wide, or later version of the double wide is called manufactured. This is an actual modular stick-built home that was built in a factory somewhere and then brought in piece by piece and placed in front of the lake here. And again, this shouldn't be considered the same as what's over my shoulder here, which are both perfectly good homes, but totally different creatures as far as what they are. So I think that was the majority of what I had in presentation. Again, you can see this type of home is totally different. And I think we actually have a modular person on here. So again, I don't want to point at any particular modular because I don't want to pick on anybody. And obviously all modulars are different. I think the modular there was probably a lot higher in price range modular build than what maybe we're talking about bringing into the market. But the point of you sharing the screen there was mainly just that there's a lot of different options there. There's a lot of things that people call modular that are not. So in realtor and real estate training and education, what's the difference? There you go. And again, I don't know who wants to go on with the presentation here. Ron.
Yeah, I will. I'm going to turn this over. I'll go through this slide real quick, and then I'm going to turn this over to our manufacturers on the call. And I'd love to hear what you have to say to go more in detail. But what's the difference? Both manufactured and modular homes look like any conventionally built home. In today's world, I mean, manufactured homes, you really can't tell the difference by walking in them that they are manufactured except for the HUD tag. But manufactured homes are built either as a single section or multi-section home, depending on the floor plan. They're constructed, delivered on a permanent chassis, so its permanent foundation is not necessary. Because of their efficient, high-quality construction, these homes provide the best value in home buying. They're the cheapest per square foot. Manufactured homes conform to housing and urban development codes, HUD codes. During your search, you'll often find them referred to as HUD properties. Modular homes are built in the factory and are built and transported on a transit and delivered to the home, and then they're typically lifted by crane and put on a permanent foundation. They're not put on a slab. So, John or what was your name? Tim, I guess. Yeah.
Jeff.
Jeff. All right.
Yep.
Jeff, you want to kick in and tell us a little bit about your process and what happens with the two different types?
No, actually, I just want to hire you because that's a great description. So everything you said is exactly true. The basic difference is that steel chassis and the way they're mounted on the foundation. There's a little bit of difference in the roof structure. Modular homes are built with a little heavier roof, thinking we're going to put porches and tie-ins and do that kind of thing to them. The only thing that I would point out is right now, Fannie Mae and Freddie Mac both have programs right now. One's called Choice Homes, one's called Advantage, where they're actually offering 30-year mortgages on manufactured homes, but they do require a permanent foundation. They require a minimum 412 roof pitch. They require some sort of a porch, gable, a garage, either attached or detached. So there is something there that does make them look a little more permanent. And actually, once you get into one of those, you really can't tell the difference at all between a modular and a manufactured. We don't build them any differently in the plant. The exact same cabinets we put in one, we put in the other. There are some upgrades and options you can do. But anymore, construction-wise, they're almost indistinguishable. I have a modular background. I've been in modular 20 years. Basically, as you said, and as you pointed out with those pictures, once modular is on a foundation, it's a stick-built home. It conforms to all state codes, BOCA, IRC, whatever code you want to talk about, Ozark residential code. That's what we build those to. HUD is built to a national code, which does allow for some how do I want to say, a little bit lesser structural support in certain areas, especially the roof. But I can also say in 45 years, I've never seen a roof failure, so we're not too worried about that. What it really comes down to in your case is cost. The HUD is generally going to be a little bit less money, but if you're going to go into this new financing program and you go to a permanent foundation, you go to garage, you go to all that, you're going to be within just a few $1,000s. I mean, literally maybe $5,000 or $6,000 of a modular. In which case, I would really recommend just go to the modular. Do the permanent foundation. Financing is easier. The banks are any bank will talk to you then. I did not have any presentation, but I will be sure and get everybody links. We have videos of our manufacturing process, how these homes are set. I'll get links to everybody so you can look at those in your own time.
Okay.
Ronnie, if he doesn't have any presentation, can I ask you a couple questions that'll give him a presentation?
Absolutely.
I have one good question, because this is something that agents get wrong a lot. And I want you to, you're the modular guy, right? Jeff, you're a modular guy.
Right.
So we're here about realtor education. So Jeff, I got to ask you, is there anything you can do to build a manufactured home up into a modular? I have people all the time that when I call them and say, hey, you've listed this as a modular and it's a manufactured, they say, well, it was originally a manufactured, then they built around it. And now it's got more home around it, stick built, than it was manufactured home. And of course, I think the answer to that is it's still a manufactured home if it was originally a 24 by 40 trailer or a whatever.
Whatever it was born is what it is. You cannot change. That steel chassis is the defining factor in most. But there's I mean, I could go on for hours and bore you all to sleep. But in a modular home, a state code, a site-built home, you have to have outlets for every 6 feet of wall or 8 feet of wall. Has to be one outlet. So if there's 9 feet of wall, there has to be 2 outlets. That's not true in a HUD code home. If you have a hallway in a standard modular or site-built home, you have to have a switch at both ends of the hallway. That's not true in a manufactured home. There's no way you can take a manufactured home, remove the steel chassis, increase the flooring, change the roof system, and then basically you'd have to take it right down to the floor and rebuild it. So no, it is not possible. If it's a HUD code, it has a HUD tag, it's a manufactured home forever.
Thank you. And next question, because that was perfect. That leads right into it. You pointed out the number of outlets is a good clue. The switches at both ends of the hallway, for example, would be a good clue. These are things that I use as clues when I identify that a home is a modular, for example, or a manufactured. And I do that either through the listing service or just by looking. But some of the ways that I identified, like when I'm in a manufactured, somebody has it listed as a manufactured home, but it sure looks like a modular, is if it's got an attic. If it's got attic space, then I know that it can't be quote unquote manufactured home because there's a spec there, I think. But I'd ask you to tell me if there's anything like that we, when we're walking through the house, can be sure, oh yeah, they built the stairwell inside the building to the basement. So this has got to be a modular, for example. I had somebody tell me once that you can't do that in a double wide or a manufactured home because the floor is just not strong enough. Is there any other clues that would just be instant clues we could use, like an attic space?
Well, attic space is not actually true. There are actually a lot of modular homes that don't have attic space in them. It's just the way the truss system is built. The first thing I usually do is go to the electric panel and look inside the electric panel, because that's where most of your codes are going to be listed. The other thing is under the kitchen sink in that cabinet, and then normally in a closet, either an entry closet, there's normally at least 2 modules. So the kitchen sink and then a closet in the other module, guest closet, master bedroom closet, there will actually be mod stickers, and it will say the modular code. But the easiest way is if you can get in the crawl space. If it's got a steel chassis, it's a manufactured house. I mean, that is the 100% never changes easiest way to do it.
Bingo. Thank you.
Well, I will. I'll ask you a question in regards to the metal chassis, because it's becoming overwhelming new modular technique to build modular on-frame homes. So I had a conversation with an appraiser down here at the lake, and I said, now, wait a minute, if we can do a modular on-frame home, how the heck are we going to resell that as a modular when it's got a metal frame and everybody's going to think it's a manufactured? So he said, well, if it doesn't have a HUD sticker, it's not manufactured. But what are your comments on that?
That has been a point of contention forever. I have never agreed with that. Metal frame is HUD code. But there is a metal sticker, a HUD tag, that is on every module of a home. It's right in the siding, it's on the back. We have what we call the hitch end, the front end of the house, and then the other end is a back end near the side somewhere. There will be a metal tag that is a HUD tag, and that tells you it's a HUD code. Now, HUD just came out with this wonderful new term called cross mod. And they're really trying to sell that, and I'm trying to find out who came up with it so I can kill them. What they're doing is they're taking a manufactured home, and I build both, so I have no prejudice against one or the other. But they're taking a manufactured home, and then they're putting it on a permanent foundation. They're adding a higher roof pitch. They're doing all these things, and they're calling it a cross mod. But to me, as soon as you put the word mod in, that means site-built, site-built code, which it is not. It is a HUD code house, just with every amenity you could possibly put in a site build. But it still gets back to its soul, which is a manufactured house. So I have never seen a modular home built on a steel chassis. There were things they used to call, what do they call them? Off-chassis mods, or years ago. They used to put basements in them years ago. They used to put staircases. There used to be a 2-story HUD. There used to be a Cape Cod HUD. There were things you could get away with years ago. None of that you can do now, but an existing home could actually be a 2-story and still be manufactured. So you're always looking for that tag, and you're always looking for that steel chassis underneath. That's the way I've always identified them.
There was a time where the South, mainly the southern manufacturers, were building state-coded modulars with a frame.
With a frame.
And that's where that's where you get the confusion.
Very few Southerners, you can't trust them.
You can't. Very few Southerners are doing that anymore.
Okay.
All northern manufacturers are not doing that, but there were a few that experimented with that, and it just, because it was such a mess up on the appraisal, it was just really hard for that to it was just very confusing.
Right. All right.
All right, so if you guys can hang around, we might have more questions for you in a little bit.
Sure.
We'll see. But that was great information. I appreciate you joining in. The next thing is I've got Scott on the line here about engineers. So when you buy a manufactured home, existing or even new, every one of those transactions, if you have financing put on them, require you to get an engineer's cert that the house was properly affixed. And we had a conversation. I asked him about some whether they ever had issues with that, because I don't normally run across any issues and how that works. But I actually have an example on the screen right now of one of the reports that Scott did for one of my clients. And, it's important that this gets done on every real estate transaction. So if you're going to go out and list a home, need to get with an engineer, and Hayman would be a good place to start, but get with them when you list the home so we don't have to wait on this at the end. And then after he's done a little bit, I'll bring up the affixation and let Tricia talk for a minute. So if Scott wants to start in, hit your space bar or whatever. Yeah, there you go.
Okay. I will tell Jeff that I have encountered those modular homes on frame, and it was very confusing. And I maintained that it was manufactured until somebody sent me a picture of the data plate that said it wasn't. So that can be very confusing. When we look at a permanent foundation, unfortunately, a lot of people have different definitions for the term permanent foundation. Tax authorities tend to mean that the wheels are off. For FHA or USDA or VA, there are some more requirements. When we go under a home, we're looking to make sure that the home is stable vertically. So we look at the footings, make sure they're appropriate materials, make sure they're appear to be an adequate surface area. We look at the piers, we make sure that they're of proper materials and that they're plumb. The pier caps, if it's a concrete masonry unit, what a lot of people call cinder block pier, we look at those to make sure they're adequate and working. And we look at anchoring for the manufactured home to make sure that it's secure against wind or seismic forces that it may encounter during its service life. That's the least understood portion of a manufactured home foundation in my experience. People have been doing footings and piers for 1,000 years. So those work on site-built homes. So almost everyone's familiar with those, and they generally get those right. But the anchoring is where we see the most problems. There are different ways you can do that. You can use metal straps with anchor heads out near the skirting, which I'm sure everybody's seen. There are proprietary systems that you take those folding chairs to a picnic or the beach and you open those out. The proprietary systems kind of remind me of a great big chair leg on one of those. The proprietary systems, you look at them and you think, how can those work? But I've seen the testing, and we've actually talked to state officials in Florida who've told us that when a hurricane goes through, the manufactured homes with the proprietary systems tend to fare just a little bit better. So we don't check the level of the home. We're looking just for stability of the foundation. Manufactured homes over time tend to need a little bit of maintenance, and sometimes they need to be leveled. We've had people ask us before, we had this foundation certificate on a previous loan, 5 years ago. Is it still good? The lenders, I think, are allowed to accept those, but we always recommend you take a look at it again. You don't know if, maybe a homeowner's gone under there and moved some things for storage, or an animal's gotten under there and undermined some of the footings or some of the anchoring. So we actually recommend that you do a new one on every loan, because conditions can change underneath a manufactured home. We do certificates like Ronnie is showing here for FHA loans, USDA loans, VA loans. They all have pretty much the same requirements as far as the foundation goes. I think that's about what I've got, unless anybody's got any questions.
So I've had some questions, like we had one question that came in prior to the meeting. It says, why does a modular home need to be on a foundation, and or can a loan be acquired when it's on piers? So could you go into a little bit about the different ways to permanently affix a home? I've had people call and say, well, the house has skirting, or it's on cinder blocks, or it's, is this house eligible? Those are the common questions that I get all the time.
Are we talking about manufactured or modular here?
Well, primarily manufactured, because modular, I mean, if you don't do a whole lot of engineering, I don't think, on modulars, but modulars are
No.
required. They cannot go on a slab or anything. They have to be on a foundation. So
Okay, manufactured homes, most of them that you see will actually be on piers. If they're what I call, and Jeff might be able to comment on this, when you've got the frame that sits down below the floor system and you've got the kind of triangular outriggers going to the walls and the marriage line, I call that an on-frame manufactured home. And when you've got basically a flush frame that goes around the perimeter and it can be perimeter supported, I refer to that as an off-frame home. I don't think we see very many of those around here. A lot of those are built so that you can put a basement underneath it and the supports are just on the marriage line and the perimeter. So most of the ones that I see in Missouri are what I refer to as an on-frame home. That's the one where you've got 2 units that attach at the marriage line, and then you've got 2 frames running underneath. And those, I would say conversationally, always, those are on piers. The piers can be of different types. They could be, you don't see it very often, but they could be a cast in place concrete pier that you set it on, or usually they're cinder block piers. There are also metal piers that you're allowed to use. HUD code provides for all those different types. HUD code actually allows wood piers as well, but we don't see those here. Those are mostly in Arizona or California. Did that answer your question? The skirting is not a structural portion of the foundation for what I call an on-frame manufactured home. It just encloses the area underneath the home. If you've got what I call the off-frame home, then the perimeter is a structural part of the foundation, and it's very similar to the permanent foundation on a stick-built or modular home.
all right, does anybody else have any questions before we move on?
Does it help in your inspections if it has a full perimeter foundation?
Does it help? It doesn't help with our determination of whether the home's going to be stable vertically or not. Well, I say that. I don't think I've seen this in Missouri. There in California, Pennsylvania, Arizona, a lot of times they'll build a cinder block perimeter wall. They'll do it just like a regular home. It'll have a sill plate on it and anchor bolts and all that. And then they will anchor the home via metal straps to the perimeter, to the rim joist of the home. But so in that case, it would help, but I don't recall having seen that in Missouri. It's a pretty expensive way to do it. So we just don't typically see it here. But I think we actually got in trouble with appraisers early on. The way HUD defines a permanent foundation, it's got to have or the way, not HUD, but FHA, the way they define a permanent foundation, it's got to have a perimeter enclosure. But the judgment of the quality of that perimeter enclosure is actually in the appraiser's bailiwick, not the engineers. So that was confusing for us for a while, until we got actual direction from HUD that told us just ignore the perimeter. It's not yours. It's the appraisers. Let them address it. So I can't speak very much to the perimeter.
All right, well, I really appreciate you joining in and giving some details from an engineer's standpoint today.
One other thing I will say, I forgot to mention this earlier. This is kind of a lending thing. As I understand it, everyone likes to put the foundation inspection off until the last minute because it has a cost. And I understand doing that, getting all the other stuff in line, but you do have to realize that it takes a little bit of time for us to complete that and get it back to you. And if there are issues that need to be addressed, repairs that need to be made in footings or piers or anchoring, that can take a little bit of time as well. So as early as you can start that, you'll be better off at meeting your closing date.
Yeah, I would highly recommend to anyone that lists a manufactured home. I mean, from a realtor standpoint, I mean, the whole world is your lot for sales. I mean, you can sell anywhere in the world. You got a product you can get. So getting to know that product up front, if that product is going to need to be used for financing, I think is very important to do that work in advance. There's, I've got one closing right now it was a rush, and now we're waiting on a lost title so that we can get the permanent affixation to get the loan closed. So the whole process stops. But anyway, so Tricia, if you got just a second, could you chime in and just give us a quick overview of what permanently affixed means?
Well, for the title insurance, I mean, your engineer's report, it sounds like he's going to cover most of it. You're requiring that on your loans ahead of time, so that's all there. It's pretty much the same thing. We need to know that the wheels have been removed, that it's permanently a permanent foundation. It's taxed with the real estate was the main things we look at. And now, of course, the affixation and the conversion process, that started, I think, back in 2011, where you could actually convert. You got rid of the title and you go through the Department of Revenue and convert it to being part of the real estate. And so that's what most lenders are looking for now, I believe, is to see that that's been done. If the lender wants what we call an Alta 7 on their policy, which is actually ensuring that it is part of the real estate and not separate, that affixation affidavit and the process with the Department of Revenue for the conversion have to be completed. We don't help with that. I know there are some title companies that do. We tried in the beginning. It just got a little complicated because of the sellers having to sign the papers and to be involved in it, or the people that own the property, not always seller. So we decided not to help. We do have the forms, so we can get them to people if they need them. But the way we tell that process has been done is that the affixation affidavit has been recorded, and then usually some kind of letter or receipt from the Department of Revenue. And that's about what we.
I appreciate that. So anybody that wants to go out and list a manufactured home, it would be wise to get your engineering report and get with Sunrise Title to give you a detailed list of things the sellers should do.
If you have a listing and they can't, they don't know if they've done the affixation or can't remember or whatever, we can definitely take a look real quick and see, because to do that conversion process, they have to record the affixation. So we can do a search real quick and see if that affidavit's been filed.
Can I point out, and you tell me if I'm wrong, but I noticed that there's a certificate of affixation and an affidavit of affixation were slightly different from there was a year line where afterwards they had to do an affixation, an affidavit of affixation. Before it was just a certificate. I had a house that I think the certificate was done in 2006 or 7, and we had to redo everything with the same documentation. So we had to go back to the License Bureau and redo it again as a certificate instead of a.
The lender used to have their own affixations and certificates that they attach to their deeds of trust that the borrowers completed. Right. That is not the Department of Revenue form. So if they'd gotten a loan and had kind of done those forms back when they got their loan, when they bought it, those were probably part of their lending package at that time for us to do the Alta 7 then under those guidelines. But then once 2011 hit, you have to use the Missouri Department of Revenue affixation affidavit form.
Right. And when that happened, I went to the county records and I pulled all the stuff that they had from 2007 and literally took those exact same documents back to the state level and had them do that. So we didn't have to pay for the structural engineer. We didn't have to pay for any of the other information. We just took it straight back to the License Bureau and applied for it as an affidavit of affixation. Is that correct? Or sound correct?
Yeah, I think that was that one we were doing with you, Cricket? I know there was one. I think
so. It was an exciting windfall because it saved us money.
Thing is if they had those on their loan, and we have actually looked for loans because people can't find the information on their homes anymore, they've remodeled or something, so we can actually go back and look at some of the loans that have been on the property before for you and see if there was any information in those deeds of trust that help. So that is one option of looking back at those loans and seeing if they did anything at that time. Sometimes they would type the serial number on the deed of trust, sometimes they wouldn't. But there might be, it might catch a time before they remodeled and took away the information you're looking for. I know we've had a couple that have been really difficult getting what they need to put on that form. But yeah, there's some ways.
When all else fails, walk into the county records and get.
That's right. We can look back and see if there's something there that was recorded before.
The sooner you do that, I mean, I just got through completing one for a loan, and it takes about a week and a half if everything goes smoothly. The
Right.
problem is oftentimes around the Lake of the Ozarks, things don't go smoothly, such as when they have replaced the cabinets in the home because they've remodeled, and therefore you can't find those, manufacturers, model numbers and names and things like that. So the sooner you get that started, the easier it is to deal with those delays and not be upsetting buyers and sellers by having to push the closing back another 2 weeks because nobody can find the certificates.
Right. Well, I think, if you just sit around and wait for cash buyers, you can avoid all those problems and just cut us banks out, because we are a pain in the rear when it comes to manufactured homes. But anyway, so moving on, if you got any more questions, we'll try to get them answered at the end. How do you finance a new construction project? Well, so if you buy a manufactured home in itself is just considered to be personal property, and that's what we were talking about, eliminating the personal property piece to be affixed to the real estate. So when you buy it, you can go to a manufactured home dealer, and they might have a source for chattel financing where you're going to pay, I don't know, it could probably be, 7-8% interest. I'm not sure what they charge, but it's more like a car loan, it could be, or a boat loan down here at the lake, like a 15-year term, on personal property. So that's called chattel financing through the dealer. And then you can put that house on land owned and connect up your utilities. You get those pieces together in a construction arrangement. You need to have somebody that can finance that piece, putting them together, and then do a permanent loan at the end and roll it into a 30-year fixed secondary market product. So on manufactured housing, your choices would be very limited in the terms. And, if you did chattel financing for favorable moderate to low income individuals. Now, if you were working with and I'll go into this a little bit more later, but USDA Direct and USDA Guaranteed will both do this on brand new manufactured housing. And we'll go into a piece later about how we can kind of put that together for you. But on modular financing, you can purchase the house through a construction loan, get the construction loan to fund the completion at 80% of the improved value. And some lenders like us right now, we're on hold, but we'll actually do 90% of the improved value. And then USDA Direct, once again, through the Direct program, has a construction perm one-time close program where they'll fund the entire construction process and draws, and at the end of it, be able to roll that into a permanent loan. So there's a lot of different ways to get a construction project. And then if you need additional information, you can send me an email, and I'd happy to go into one-on-one. But new construction on a site-built home is a very complicated process. I just recently sold a spec home, and oh my God, it's just the amount of details that are involved in building a house is incredible. But for a consumer, if you're looking around and you find, oh my gosh, we've got a lot in Port of Sema for $5,000, we want to build a house on there. They come in, they say, well, yeah, we're going to do a new house. And well, here's the steps involved. You got to find your site for it, and either purchase a site or figure out how to get that included into your construction loan. You got to develop the site. You got to get excavation. You got to connect utilities, water, sewer. You got to get foundation. You got to get with an architect to design your property, or buy some kind of design online, and then hopefully it works for you. You need to find a general contractor that can help you put all these pieces to the puzzle together and manage the project. The average cost down here at the Lake of the Ozarks is, and I'm really being modest with the $145 a foot number, but typically for a new construction project, when you do it down here in the lake area, it's going to be priced at about $150 a foot. And if you go to sell that house or refinance that house in the secondary market on offshore, you'll never get it to appraise for $150 a square foot, which is way above the construction cost. Then you got to, wait at least 6 months to get your house completed. In my case, it was 9. Manage all the cost overruns, which in my case was $30,000 in cost overruns. But anyway, so it's a cumbersome process, and most consumers don't even have an idea of how many pieces to these puzzles are included in doing a new construction. A modular home construction, it's the same as a site-built construction, but it's built in a factory, and the factory is in a controlled environment. So many people will tell you that they're far superior to a stick-built home because you don't have weather environment, all those factors playing into it. You've got actual engineered square walls. I don't know how many site-built homes you've been in and tried to remodel, but then you go to take a square and stick it in the corner of a room, and the room's not even square. But so modular home construction is, everybody knows it is done a lot better than a site-built construction. All you have to do to construct a project for a modular is you need to select a site, and you need to, the best thing is just to purchase the site. Then you need to develop the site, which is excavation, and down in the lake area, we've got lots of people available for excavation and lots of people for foundation, concrete work. And most of those people will also take care of connecting the utilities and water if it's available. If you do have a site that's undeveloped, then there are a few extra costs with septic or well, or however you're going to access those utilities. Then you've got the cost of foundation it's usually connected to the excavation and people. Then you get your construction financing lined up. Basically, any bank, including us when we get back and rolling, but will finance modular home construction, typically with 20% equity. So if you take a house, a brand new home, you buy a lot for $10,000, and you put a house on it that costs you $80 a square foot, and then you appraise that as a site-built home and get to compare it to other site-built homes, you're going to have 20% equity in that project. So you literally won't be out of pocket any money if you already own that land before you do your construction loan. If you're going to do it as part of the construction loan, you'll have to have 20% equity injection at the time of purchase with the lot. You can then you just start the site prep. You order the house, you start your site prep. Site prep usually takes about 30 days to get your foundation in, excavation work done, all the utilities ready, lined up. Depending on what the market is for building these modular homes in the factory, they can do several homes at a time. But everybody's starting to catch on to the fact that this housing shortage is not just at the Lake of the Ozarks, it's a nationwide problem. So a lot of people are starting to order. So right now they're typically running maybe 60 days, maybe a little more to get a house delivered to site. And then you've got about a week or so at the site, finish work that you have to take care of. So it's basically the home's delivered, set on a foundation, and then you finish your site work in about a week and you're done. If you're doing it with a construction loan, then you would roll that construction loan into a permanent 30-year secondary market product or with a local bank. So manufactured housing can be financed by most any lender. However, on existing homes, it can only be financed with no money down through USDA Direct. I'd be happy to provide more links to that. I've sent out several USDA Direct applications. I'm working with the Lake Area Housing CDC to get a local direct application packager, which I've got. I see Jerry's iPad. I think that's our mayor of Lake Ozarks on the call, but he's the president of that organization. What we're trying to do is get more financing options available to local consumers that's affordable for direct financing. But direct will do manufactured home existing as long as it's permanently affixed, and it's the only option available to consumers. on existing manufactured permanently affixed, you can do all the other products in the secondary market, but it doesn't help the low income community. On modular housing, the financing options are available and the same as any other site-built home. So there's not any loan product that you cannot do on a modular home. It's treated exactly the same as a site-built home for appraisal purposes, for real estate purposes. I'm not real sure what real estate disclosure laws are on resale of modular homes, but as far as disclosure and whatnot, but for all intents and purposes, it's a site-built home when you go to resell it. So you're not going to lose any value. You're not going to have any kind of financing stigma in the future, and it's a great way to build affordable housing at the Lake of the Ozarks that you can, in turn, build equity in and upgrade in the future. So it's a much desired solution for the lake. I put in a few financing options just to kind of show you a little bit. If we do a USDA zero down guaranteed loan, which is what I'd say probably 90% of the real estate community is familiar with. It's done through all of our lenders, affiliates that are on this call, as well as local banks. It's a USDA just guaranteeing a bank loan is what that is. So we have certain underwriting criteria and different things to go through. But that loan, when I did this slide, it's actually a little better right now. But at $169 purchase price, we loan money and they actually have a guarantee fee and they finance that into the loan amount at an interest rate of 3.25%, gives us a total payment with taxes and insurance, which are estimated down here for the county average of $952.24 a month, and that's with zero down. So that's a $169,000 purchase price, zero money down at $952.24 a month, including taxes and insurance. So rents, from what I hear down here, have gone up from for a suitable house from 1,000 to maybe 1,200 now, and even a waiting list for that. This is a much more affordable option for people that live at the lake that can provide services to the vacationers that come down here to work to enjoy themselves. So USDA direct financing, I am not a direct packager yet, so I can't really speak for what their fees are involved. I would assume that they are substantially less than the secondary market fees. But that is a 100% loan, and it will actually can be put on a, if you make less than $44,000 a year household income, you can put it on a 38-year term. And if you make very low income, they will actually subsidize your payment at a 1% interest rate. But this is shown as an unsubsidized USDA direct financing. It's at 3.25 on a 38-year term. Is $854.91 a month with zero down. And that can also be done on direct through with manufactured housing. So just think of what a payment would be on a $140,000 manufactured home on 5 acres through the direct program. The VA, which is, I do a lot of veteran loans down here at the lake. We've got the highest population of veterans in the entire state of Missouri, just right here in Camden County. So VA, no money down on manufactured or modular. But for the modular housing, $169 purchase price. There's no rate hit for modular. Rates are actually a little better. A veteran can buy a house with zero down at $944 a month, and then a 5% down conventional. So for the real estate community, when you're looking at these modular houses, we can put this package together pretty quickly and provide housing that is affordable, that people can actually afford. And it's not a Section 8 type housing at the lake. We've got plenty of land and stuff available. Here's some USDA direct information. I don't know if you can click on these links through the webinar or not, but if you need this link, I'd be happy to provide it to you. But if you look at the income levels for this, you've got the grant income, which is the very low 1% interest rate, which is a subsidized program, is 13, or is, well, for family of four is 18,900 a year in household income. And the low income program, which is on the 38 year, it's a 30 year for 50,400. If you make less than 37,800, you can get it on a 38 year term. The guaranteed moderate income level is what all the banks do. It's a very generous household income, so there's a lot of people that will qualify up to 90,000 a year in income. So the last screen is basically how you can connect. I recommend that if you have any questions, there's a lot of professionals that you can reach out to here at the lake, but ask the questions. When you partner up with a banker, and when you partner up with a realtor, the communication and getting these answers to these questions are important. If you're a consumer that is logging in to watch this video, this is the reason you need to have a real estate professional helping you. There's a lot of pieces to this puzzle, and you need to make sure that you take care of all these pieces to the puzzle.
And not to interrupt you, Ron, but if you're looking at my numbers, there's also a number missing. My broker phone number is 417-312-9378. That's compliance. Sorry about that, guys. Back to what you were saying.
Yeah, I forget about compliance since I work at a bank.
I know. You're all right. I should have looked at that. You sent me the slides. My apologies.
Okay, so
apologies, sir. I just know other realtors are watching, and I apologize.
Well, now that it's really late in this presentation, I didn't think it would take as long as it did, but I forgot to ask in the beginning, this Feed the Brain series, I think we've had a lot of success with this over the last year and a half or so. We've taken a little bit of a break now, but we really need to get some suggestions, and hopefully we can get some comments on our threads to get more suggestions, but we need suggestions on how to do this. I would love to see this happen maybe once a month. Maybe when we start getting back together, we can blend the Zoom along with in-person meetings. But I think this information is valuable to the real estate community, and I think it's very valuable to consumers. And I think that if we can educate everybody, it'll make real estate a lot better. So does anyone else have any more comments? Beth, would you like to have anything to say?
A question did come in. How can we as realtors tell the difference between a stick-built and a modular fairly easily? How can we tell the difference? Other than taking the square in the corners and.
Yeah, who would like to answer that, Jeff?
They're actually built so you can't easily tell. But the easiest way to do it, the one thing that will never let you down, is if you can get in the crawl space. If it's a basement, it's easier too. But a modular home is always brought in two sections. So if you get in the basement and you look up, right down the center, there should be either LVL or 2x10s running lengthways in the house, usually 4 sets. So instead of one long floor truss going all the way across the floor, you have 2 halves that join in the middle. As far as I know, that's about the only way when I get into a house that I can tell for sure, okay, this was 2 halves put together, or no, this was a site-built home, or the sticker.
Can I add one thing? If you can find the data plate in the closet, that'll tell you also.
Yeah. But a lot of times they do like to paint over those or rip them down once they get in. But yeah, that's the surest way as well.
Thank you.
I can also tell you that if it is more than a 2-piece modular, which is becoming more and more common, you can always tell because of that one wall is always this thick instead of this thick, where that odd third component or more meets one of the outside walls. So it's pretty obvious once you know what you're looking at. Once you've seen it once and recognize it, they stand out. Yeah,
that center wall is usually going to be 8 inches, where in a regular home it's going to be 4. But the house that I just sold was actually an older home, and it was built onto, so every wall I had was an exterior wall at one time. So a lot of people thought I lived in a modular, and it wasn't, but that's rare. What you said is actually very, very true.
Ron, I have a question.
All right.
What is the average cost of hooking up utilities, sewer and water where it's available?
Well, I mean, it's kind of hard to determine unless you know exactly the site that you're looking at. But if it's an offshore property that has enough land to put in a normal septic with laterals, you know, we're looking at what, probably 8,000 for septic, 8 to 10. Then you've got you know, well, and I haven't participated in digging any wells, but I've heard that they're around 8,000, I believe, to dig a well, depending on how deep you got to dig it. And then, you know, excavation, foundation, and stuff like that. Depending on what the footprint of the house is, you're probably looking at 11 to 20,000 on the footprint, just for the concrete work. And then, if you're doing USDA and you're doing modular and you want to do a vapor barrier on your crawl space, you're probably at 10 grand for excavation.
What I really meant, I guess I didn't convey it right. What are the tap fees that these cities?
It varies
Well,
community to community and city to city. So your question is a good question, but it's a little bit loaded. If you chose like Eagle Bay, you're paying about $2,500 just to connect to community sewer and water as a fee, but that doesn't actually cover the physical effort of connecting it.
What?
Yeah, no, I realize that. I just want to know what the cities are charging.
I would think the different cities are probably different. I would think, you know, Camdenton is probably different than Versailles or Stover. I would think.
I was just in
well,
a conversation with Lebanon about that, and they said they were talking somewhere in the range of $2,000 to $4,000 per city lot to hook up to what was already existing there. So they were talking about the economic development they were doing that was helping to waive those fees. I think that might answer Bill's question, at least in a roundabout.
yeah, so like Jerry, I don't know if he's still listening or not, but a lot of the cities down here and county are very much in favor of getting additional housing. So as far as hookup fees and stuff like that, you can probably work with those municipalities, and they're going to make it easier for us to get it done, whether it has to be financially or not. I mean, there's a huge need. I mean, we need houses, and we need some new housing stock here at the lake. So, you know, reach out, and you know, if you've got a good lot and you want to put together a package, you know, I guarantee you the municipality will help you do that. So
I would think, especially if you were going to build more than one, they'd probably really want to help out.
yeah.
Hey, Ron, on a sort of a different subject, and it might be, you know, bad words for you. Do you do any single wide financing? Do you have any programs for that?
I do not, and there's really no secondary market for that. That's more of a bank portfolio loan. Now, if you run across one and it's a pretty decent credit file risk-wise, I know that Chris Senna over at Central Bank, I've referred a few people to her. She's one of the few loan officers that will actually work those programs. A lot of people at Central Bank don't, because they're more like us, you know, and just working on single family residences. And
Well, every now and then you find a really nice lakefront lot and it has a single wide on it. You know, maybe they've built onto it a little bit, but it's still a single wide.
yeah. Yeah, but I think you could give Chris a call over at Central Bank, and I think that, you know, if it's a decent credit file, I believe they'll work them and they do them as a bank portfolio.
Yeah, or we've had them where they, you know, they were able to do something with their house in the city, some kind of equity loan on that or something. One more question that came in. On the hookups for the different utilities, is that possible to wrap into a loan on a new?
Yeah, through the construction process, that would be one of the draws. You know, if they're just doing a construction perm one-time close, then of course it would be included as well. But yeah, that's just part of the construction process. So if you own the land, you know, it could be all rolled into the loan, and you don't really have to worry about probably coming out of pocket at all, because you should have enough equity, especially if it's manufactured or modular.
I can also say that there are only 3 lenders I've found that will work with single wides. They are getting much, much more picky lately. You have Bank of Versailles, you have Central Bank, and Bank of Sullivan did one for us last year for a client, but those are the only ones I know of. The challenge lies in that most of those single wides you find may not meet their requirements, because all the ones that we've done have been affixed, have had real nice foundations underneath them or full perimeter foundations. And it does take a pretty solid credit file of at least, you know, 670 or more lately. But even they have started to back off and get more conservative, just due to current events.
All right, so if Linda and Beth, if you want to reach out to get more questions on what we can do next, I'd love to get another one of these scheduled.
Okay.
Appreciate everybody being on here, and thanks, Cricket. And
Hey, Ron, if I could just point out real quick, anybody that's watching, if you heard a term that you didn't understand, if there was something that was, you know, a couple words that didn't make sense, like an industry term, like chattel loan, for example, reach out to Ron, reach out to one of the local realtors, reach out to one of these people that's listed here. Ask your questions, get answers so that you'll know what you're talking about, whether you're a consumer, a buyer, a seller, whatever. You need to know what you're talking about. And of course, some of these words were pretty particular. So I'm going to have to find out exactly what he means by chattel loan. You like that? I'm a real estate agent. I should know. Anyway, if you got questions, reach out to us.
Cool. Yeah.
do what?
I remember that from our real estate school.
Yep.
I think it's a cool sounding word. That's why I remember it, I think.
I like industry terms, but don't let them confuse you folks. If you don't know the term, look it up or call somebody and ask.
Yep, good idea.
All right, so appreciate it. I got to get to work and close some transactions.
Thanks, everybody. Thanks, Ron.
All right, thanks.
Ron.